Welcome to the Wall Street Crossover Show, brought to you by Tip TV in conjunction with our sponsors for this segment, Admiral Markets. It gives me great pleasure to reintroduce Mr. Zach Meir, who is co-hosting today in the absence of Darren Sinden, who will be back with us at 1 p.m. on Monday. Zach, good week for the equity markets.
Very good. I mean, I think probably people might, after the non-farm payrolls where there was that reversal intraday, technically that was a very strong move. I think the Dow was down 200 and closed up 200 or something like that.
Well, this time last week, it basically had the biggest reversal in 4 years, the S&P 500,
so the reversals,
on heavy volume.
Yeah, so reversals are great. I think, if you just have a big update, that can be in a bear market, but a reversal is just a massive bull signal. And it's proved to be the case. For a change, it's been reliable. Yeah,
understood. Okay, if you're watching for the first time, we've got a number of slides we're going to go through. Let's kick off with our first one, data released over the European session. Today we had the French industrial output month on month, came in at 1.6% versus 0.5%. The previous was 0.8. That's good news for France.
I think, yeah, they needed some good news, and that's a pretty good one. A pretty good metric there. That's the sort of normally the weak link these days, and a stonking figure.
Yep. UK trade balance for August 3.7 versus 3.3, so slightly worse than anticipated. Any thoughts on that?
No, I think that's sort of a neutral figure for the market, but obviously it could do better.
Yeah. Greek CPI year on year September again negative. Greece is almost on the back pages now.
Yes, I think that I suppose the best thing about that is probably the way that Tsipras, the prime minister, has played his hand so well. Kept on asking for sort of votes and referendums and everything like that, and I suppose there is some stability there.
And an IMF meeting, I know that Miss Lagarde, she was basically saying China's not perhaps in such a bad pickle as we all thought it was.
Well, the best thing about that was there was an article in the Telegraph today where they were complaining that the IMF is too French biased.
Oh, really? Right, in terms of, I picked up a point about yesterday's data point. Germany exports plummeted by 5.2% in August compared with July, the sharpest monthly decline since January of 2009.
Well, if the US Democrats have their way, it's going to plummet even more with VW's car sales going down.
Okay, let's move on to, I just thought we'd do something on the central banks. It felt as if it was central bank day yesterday. Rates remain on hold. The Bank of England voted 8-1 to maintain rates at 0.5%. And again, I think a number of people have suggested that rates will go up in the UK anytime between February of next year to early 2017. So again, not particularly clear. ECB reiterated it would consider extending the asset purchase programme past September 2016. So again, this continuation of cheap money. And the Fed basically said it's close to raising rates, but risks of a Chinese economic slowdown hurting the US growth stopped them. So they were close but no cigar.
That's right. I don't know how close. It would have been interesting to know in a parallel universe how close it would have been if there hadn't been a China situation going on. So, because the data actually with the non-farm payrolls is not that good anyway. So as it turned out, they probably did the right thing, but for the wrong reasons.
Understood. Let's move on to M&A, rumours and movers. AB InBev yesterday hit back at SAB Miller rejection of its £42.50 per share offer, saying the rejection lacks credibility. Dell in US reportedly in a $50 billion talk with EMC. I think that was in the Wall Street Journal. This would rank as the biggest technology industry takeover ever. Quite interesting. If the market stabilise, we're probably going to get some more corporate activity into year end.
Yes, I think the only issue is, just like the SAB thing, that you've got a lot of boards, management rejecting offers because they sort of tend to want to stay where they are. So we had that with Smith and Nephew. We've had that sort of around the place, and it just seems to be, the people looking for M&A are in general disappointed either because of that or because of competition issues.
Understood. Let's move on now to the next slide. US data points to keep an eye on. Today we've got the US export and import indices for September, Canadian unemployment, Canadian net change in employment, and we've got two speeches by the Fed, Lockhart and Evans. These Fed speeches seem to be happening.
Well, they're more important now, but they're actually more important in relative terms because, unfortunately, the chair of the Fed is not really big on speaking. So we're really getting guidance from her assistants rather than herself, which is a bit of a shame. It's a bit of a power vacuum there, I think.
Okay, let's move on to our last slide. US pre-market movers and levels. Just before we go into the actual chart points, I saw a big headline.
Like that.
Amazon hires 19,000 in the UK ahead of Christmas.
A lot of complaints that foreign companies don't pay any tax, but they do actually do something good for people who live in this country.
Yesterday, the railway stock surge, resulting in a 2.1% gain by the Dow Jones Railroad Index. American railcar industries surged 20%. So again, Amazon, this is all quite good stuff, I would have thought.
Yes, I mean, I think that's a sort of good old-fashioned infrastructure type of story.
Right, chart points. FTSE 63.90 to the downside, plays 6,500 to the upside. Again,
well, I think, if you just said even a week ago saying the FTSE could touch 6,500 so quickly, I mean, people would be laughing. It was, 6,000, we were sort of shaking like leaves, and now we've recouped
back in safe territory.
Yeah, exactly, yes.
And again, Mark Faber, for what it's worth this week, has suggested we're in crash territory. Dr. Doom and Gloom. S&P 500, 1994, plays 2,035. We've talked to Stu about that gap to the downside needing to be filled, 1944, 1955. That's worth bearing in mind if you're looking at your technicals. The DAX, 10,180, plays 10,250. Again, that fill position back in offence, would you say, Zach?
Yeah, in fact, that figure should be 10,050, but basically 10,000 recovered very easily by the DAX. Again, something that would not have been expected even just a few sessions ago, let's say.
Understood. Dow Jones, 16,850, plays 17,125.
Yeah, the big number, 17,000. See if we can get a close above that. That would be pretty impressive.
Do you think that some of the momentum type systems would then kick in if we're back above 17,000?
I think they would. I suppose it's sort of the old-fashioned fundamental value players who buy the dips or buy when the market really tanks, as it did last month. They buy in then, but then the technical players come in and try and push these things afterwards. And I think you're right.
Okay. In terms of the currencies, dollar yen, 119.60 plays 120.80. We've seen this continuation, this sideways move, and generally.
Well, we had that before the peak. On the way up, we had 2-3 months of consolidation around these levels, and presumably we might get 2 or 3 months. We've got another month to go as well in terms of that going on.
Euro dollar 112.70 to the downside, 114.60 to the upside. We don't really understand the fundamentals at this stage, but the technicals appear to be leading the market higher.
It looks like dollar weakness is winning there, even over the QE, which is expected later in December, later in the year. But it's quite strange that you've got the euro dollar going up and you've also got the DAX going up. They have been going in different directions, so euro up and DAX down. So that's going to be interesting for the rest of the session.
Aussie US dollar 72.50, plays 73.80.
Commodity currencies really coming back. The Aussie dollar was stuck around the 70 level again just a week or so ago, but that's just right back in there, and gold leading it higher.
And finally, cable 153.20 plays 154.20 is the chart points. Good strength in cable.
Good strength there. The 50-day average 54.25, so that's resistance for that market. But we've got that means we still could have another 0.5% of upside there for cable.
Okay, so just to wrap up, a good week for the equity markets. Is there anything you're particularly happy about, or anything you're particularly sad about?
I think happy that there has been that recovery. I think sad probably that, well, on behalf of other people, they probably missed out because they were, in that rally because they were looking for further weakness, which hasn't materialised.
Zach Meir, thank you very much for your time. That wraps up the Wall Street Crossover Show. We're back at 1 p.m. We'll be back with Darren Sinden, the market commentator from Admiral Markets, 1 p.m. Monday. Have a good weekend. Thank you.